Sandbars like UUP. I love this little chart. I love it because we've been in this wedge formation, bouncing back and forth between resistance and this overhead and this support. Broke the support, came down, moved sideways, came up to the support, and dropped down and bounced around a little bit today. So the dollar gave a half-hearted attempt at recovery in the midst of all of this craziness over the past few days, and today, relatively strong today, given the state of the other parts of the market. USO, United States Oil Fund. Look at that, oil is dropping. Here we are, it was about $45. Here we are coming down to the 30-ish type of range. Isn't that interesting? That's a what percentage drop? I wonder if we'll see that at the pumps. If we go back to let's see, we have the chart time. Let me go back to this sort of long-term chart here. Look what's happening. Now, where the valid line is, I don't know. If the valid line is here, fine, we broke it. If the valid line is up here, where I thought it once was, we still broke it. Where's the bottom for oil? There's a fellow out there talking about $10 oil. Not, by the way, this does not necessarily correspond to the actual price of oil. This is for the LP, so it's got to be understood as such. But here's the big 5-year history of it. We've broken out of this support line. This had been the overhead line, and we've broken down. So maybe there's going to be cheaper oil in the future. We'll just have to take a look down the road. We look at the S&P, but here's the 5-year picture. That's a pretty dramatic break. I'm not looking for a bottom right away. Now, we could be fooled. All kinds of things can happen in this wonky economy, but that does not look like an index that's going to go bullish soon. I'd say the same for the S&P 500. Is this indicator? Let's go look at SLV, our quarterly silver. Ooh, that's a messy chart. Let's go in here to say 1 month. We have the sideways price action. We broke to the upside. We all got fooled. It broke back down. It cracked this vicious sort of support area, whatever that was. Cracked that down, cracked above it, moving sideways. You'd have expected to see some kind of big move up in all this uncertainty, but no. Here's the SIPR trust, same basic price action. The Rogers Elements, National Commodity Index, not doing real well. Jim Rogers is doing commodities, but here we were up at 725-ish. Now we're down here at 625-ish. That's a pretty hefty decline when you're dealing with those percentage numbers. Another decline in the Rogers International Commodity Index. I'm not feeling like a buyer of those, although, again, this market is so wonky that I'm not sure any trend is a valid trend. There's the DXO. We looked at that. But let's look at the GLD. Here we have something that at least kind of makes sense. Tremendous uncertainty in the market. Boom, there go prices. So looking on the 1 month chart, there you are. 1 week chart, there you are. 1 day chart, there you are. So the gold kind of makes sense. It's the one thing I can see that does. And just for the fun of it, let's look at BP here for a minute. Poor old BP. Wow, this is a company that just can't get out of its own way. I assume that this is the oil spill here. Look at that. That's a tremendous decline. 47 and 38. And again, no telling what's going to happen, but the bottom's not in sight. I would expect we'll see at some point some kind of a flag or pennant move out sideways, followed by probably another spike down. We could see these stocks, for example, a stock like this one, we could see this, it was basically at 50. Watch for it at 25. That's basic math division. We don't have to get fancy with Gantt charts and Fibonacci. Basically, we go to half. We went through some others real quick. Bank of America, hammered down to $6.77. Ford, $9.93. That's cut in half from its recent price. That is a brutal decline. You compare these declines to the Great Depression. You know, some stocks lost 100%, of course, in the Great Depression, and some stocks probably lose 100% this go around. But a 50% decline in your wealth is a fairly substantial roller coaster. GE, another company, probably. I won't say it never will dig out of its finance company problems, but it's been, the GE finance has been a problem for it, and obviously something else is a problem for it. So there you go. My little HNP, boy, was this a bad one for me. Oh boy, it's the one that I own a little bit of, just a little bit, thank goodness. And there it is. So I'm just going to hang on a little for the ride. We'll see where it goes. Probably zero, but that's what will happen. Mohawk Industries, big American manufacturer, bouncing around like crazy, but a very hefty down day here today. And they're making some money, so they're not doing too badly. Nucor, look at that. That's pretty vicious on the downside. And this was interesting because this, somewhere in here, there's some pretty solid buying support for this stock, and it just went away over this short time frame here. Now we're down to the 32 range, we were up at the 49 range. That's about, what is that, a 36%, 35% decline? It's hefty. P&G, ostensibly a great company, hammered. Southern Company, one of my personal favorites, but look at that chart right there. I'm telling you, that's wicked. That's just wicked. Now, we went through a couple more of these. I'm trying to keep this relatively short, although I'm not really worrying about it too much. SYY, Cisco, the food company, not the electronics. Kind of a weird chart, you know. They're getting back down the same range they were a little while back ago. T, there's the double top. There's a decline. 32 here. 27 here. It's a 5. Just not quite. It's a $4.30 chunk out of a $32 stock. Not to be underestimated here in terms of the pain that can cause. Look at Exxon. Exxon decisively broke this support line, where once this was a $88 or $90, almost a $90 stock. It is now almost a $70 stock. There's another relatively hefty decline. Nothing like some of these others, but not great. A great place to be. Maybe I'll skip the ETFs. We don't really want to see those. Look at that for a moment. Here's a realty income. Ooh, brutal, isn't that brutal? 28 with once 36. That's nasty stuff right there. Going down to some of the dividend payers. A flat, hammered. EDX, hammered. BP used to be a dividend payer, but who knows now. Clorox, hammered. That's a good company. Regular dividend payer. CSX, hammered. EMR, hammered. Look at this EMR up here. $61 now, 42. Barrel gas. And I would think with a situation with all these energy supplies, gas would be a good place to be. Look at this though. 28 to 18. That's a $10 drop on a $30 stock. Big chunk. Big chunk. Heinz, Carry Fortune. Alright. Holding up fairly well. But this is a problem here. But this could be a fake out for us, you know. But holding up fairly well, all things considered. And Morgan Energy. You know, supposed to be a good dividend payer. Hammered. Once almost 78, now 65. Lowe's, the competitor to Home Depot. Bam, look at that. Another one of those almost $10 declines. So the question really to be asking ourselves as we run through some of these, like Verizon, good dividend paying stock. Hey, not a bad looking chart really, because here's some support. Let's draw this line. Here's some resistance overhead. Turns kind of into support there. And it's kind of support here. We just kind of broke through it a little bit. You can't quite call it solid line, but that's not as bad as some of these stocks we've seen. Walmart, boom. Exxon, got it right, but there it is again. It's an interesting movement. We'll grab a couple of gold stocks real quickly. Goldfields, GFI, bouncing around like crazy. There we go. I can't tell you. Oh, look at that gold stock. That's a gold stock right there. Excuse me, I take that back. I lied to you. That's an SDY, Spider, for S&P Dividends ETF. My mistake. Apologize for that. So those are a few of the stocks that we've been tracking around here. And if we look at McDonald's, still pretty strong, not too bad. We look at PepsiCo. Maybe we're getting the bottom in here in PepsiCo. That's interesting right across there. Wouldn't surprise me with Pepsi. Coke, not much of a retreat. P&G, a retreat. Where's the bottom for it? My portable power company, totally decimated. Pfizer, we beat up on Pfizer. Mohawk, we looked at, they don't pay a dividend, we'll skip them. Abbott Laboratories. Yeah, look at these stocks. So here's the question. I'm going to go back. Whatever indexes. You know what they say? Buy when the blood is in the streets. So I think the question becomes, how much blood would we wait for? Because there's definitely blood in the streets. It's just a question of, is there enough blood to justify taking a bullish position? So when I look at the index, and I'm not saying this is true of any individual stocks, when I look at the index, I don't see a lot stopping it. Some of the other stocks seem pretty strong. Whether they can hold those positions, I don't know. It's a great time to sit on the sidelines and enjoy the view. Thanks.